Welcome back to our weekly hot picks here, our switch on hot picks. This week we're going to take a look at our oil markets. It begins and ends with oil right now, given the state of the Iranian war. And we've also got the volatility index. We're going to talk volatility, US dollar, Japanese yen, and then also the Great Britain pound, Australian dollar. So let's go ahead and get started here with our first market. It's going to be US oil based on that WTI contract in the United States. You can see that this US oil daily chart, fascinating stuff. We had just the epic spike on Monday, probably one of the biggest ranges in history, in crude oil history. If not, it was very close. You had 119.48 to the top side, and then to the downside, you had about 81.19. I mean, that's a staggering, almost a $40 range. Absolutely huge. The volatility, we started off with just a tremendous run to that 119 level right after yesterday's electronic open. And then since then, it's been a lot of news items that have tempered this market. This sort of put a lid on it. We had an announcement from the G7 saying they were going to be considering releasing some strategic oil reserves. We also had statements from the Trump administration, guarantees that the Strait of Hormuz was going to be open. We also had a statement from Trump himself saying the war was pretty much accomplished and it may be winding down much sooner than first expected. So we're watching this oil market because it's driving pretty much everything on the board. Remember that inverse correlation. As oil goes up, stocks have pretty much come down, and as oil goes down, stocks go up. You had the Dow Jones, the S&P 500, and the NASDAQ in deep intraday holes. And as soon as oil reversed, they actually closed in the positive in an unbelievable swing of volatility across the market. So U.S. oil, we're looking at downside support. That is a key level right there at 84.93. That 85 zone is big, is very, very big. And then down to the downside, you've got a 75.54 down here, 78% of this daily range. That's also another key level. And we've got a 13-day EMA in play at about 77.72. So there is some downside support levels. Don't think that the market can't crash and go right back down to those zones. With this much volatility in the market, anything is possible. Of course, the top side is vulnerable, especially if we do get another key news item or maybe a surprise news item out of the Israel-US-Iran war. The top side is definitely vulnerable. So if we see escalation, if we see boots on the ground, that's certainly a possibility of something that will drive the oil markets higher. Any damage to infrastructure, if we start seeing supply tanks getting hit, if we see a tanker actually hit in the Strait of Hormuz, that's going to be a big deal as well. So be careful if you're holding shorts, but there are some downside support zones that are likely to come into play very soon. This is just a quick look at the WTI contract, April WTI. We're getting ready to roll to May, but this April, we're still getting a lot of volume on April. And you can see sort of what we've got right here is a situation where, yesterday we had 1.8 million contracts change hands. Today already, as of this video, you've almost got 100,000 contracts. That's still heavy volatility. Absolutely heavy volatility, downside support right there at 84.95. You've also got 75.56 in play. That gap area is interesting too, down there between 67 and 69. So that's the WTI futures contract. Okay, let's look at Brent or UKOIL. This is definitely a market that everybody's watching right now, especially because it's the international barometer of the oil trade. So when you're thinking about international oil, North Sea Brent, this Brent crude contract is probably one to watch, definitely to sort of reflect the idea of global supply, maybe not just U.S. production and U.S. supplies. Something to think about there. But Brent, you can see we've got we got a support zone right around $86. I would be watching that. 62%, 78% right down around 78, 66 or so. That gap area is right around 75. So if you're trading a Brent crude, this gap, I think that we eventually revisit it. I don't know if it's this week or next week or the following week. More than likely we'll go down to that 75 zone, and that could be an area of a little bit of two-way action, maybe some downside support there as well. So that's a good look at U.S. oil and Brent. Those are the number one market drivers for all markets right now. As oil goes up, stocks and risk assets come down. As oil goes down, stocks and risk assets go up. It really is that simple right now. All right, the volatility index, the CBOE Volatility Index, or the VIX. What we had here was just an absolutely epic day. The VIX finished off 13.5%. The VIX opened trade at about 35.12. And when it did open at that elevated level, we saw massive participation to the bear in your U.S. equities indices. Remember, the CBOE Volatility Index, the VIX, is based on deferred month S&P 500 options premiums. A lot of volatility looking forward. That's what makes the VIX get elevated when it goes up. It's Wall Street's fear gauge. As the VIX goes up, stocks typically come down. As the VIX comes down, stocks typically go up. Today was absolutely incredible. We opened up around 35, which was sort of a big elevated level for me. I said last week and on our live streams that 30 was a big deal. 30 is a nice zone. You can see it sort of had a test of that area in October, and then also one in November. This area right in here, that tariff crash that we saw last April from Liberation Day and the institution of the tariffs brought about a tremendous uptick in the VIX, and we sort of tested right in that sort of the latter part of that. So 30 is always a big deal. The long-term average is 21, so we're still elevated, but right now, for Monday, we went off the board at about 25.50. Keep a close eye on that VIX. Remember, as the VIX rises, what does that mean? It means there's more angst in the market. Stocks likely to come off. So I'm always looking at the VIX at least once a day. Pretty much every hour I'm looking at the VIX to see where those levels are. 25.50 is interesting. Long-term average is 21. If we return to 21, then the coast may be clear for our market volatility. Okay, U.S. dollar, Japanese yen. We're looking at this on a 4-hour chart. We think that potentially there could be a buying opportunity, a selling opportunity if we do see that 9 EMA cross under the 20. That could definitely put us in a position potentially to sell this market as we're rolling into the midweek trade. But you've got to see it. You've got to see the cross under. And right now we don't quite have it, but it is a 4-hour chart. So potentially maybe by the time the London session opens or you see this video, that cross under will have developed, and that will be essentially a trigger maybe to get into the short side of this market and play that U.S. dollar strength. Could be waning just a little bit. Now, as far as a longer-term time frame, if you wanted to step back and maybe go on a daily, you can see we had that buy signal back in the 25th of February. That was a great trade. You can see your daily 9 EMA is down here right around 157 even, and then you've got your 20 EMA down there at 156. Maybe just running a quick Fibonacci retracement sequence may give you some support zones to look at, and pretty good support right there, 157.39, maybe 156. For me, I just assume go back to that 4-hour time frame. And if we do get the cross under, you'll notice that we've got some room. If we cross under maybe down here at one of these support zones, we may have an opportunity to get a nice sell there in the dollar yen late in the week. So CPI Wednesday, that's going to be the big thing for the U.S. dollar. Be sure to tune in for that. I'll have that live for you. And then we'll also have a lot of forex analysis on our Tuesday live stream, Wednesday CPI live. It's going to be a big week for our forex pairs. Last one I'm going to show you is the Great Britain pound Australian dollar. A lot of people are trading this pair right now. The pound Aussie, sort of dependent on that Bank of England interest rate expectations. Maybe UK GDP that comes out Friday could roil this market. But realistically, what's going on with this particular pair is the relationship between gold and your Australian dollar. So be watching gold. Remember, as gold goes, so does the Aussie. So in this type of an environment, if you do see gold maybe sell off a little bit, back down to 5,000 or so, you might get a nice bump in this market. So we've got a topside resistance sort of on the distant horizon, up there at about 93.72. Not a bad level, though. It's one that I'll be watching. You can see we've got sort of that inverted hammer formation, or just a regular hammer formation on the weekly. Sort of suggests that we're going to get a little bit of bullish price action. I think that if a person wanted to go long, you certainly could do it. You just got to stop yourself out beneath this swing low. I don't necessarily believe that's a bad trade, but I personally am waiting for this market to get in a little bit of disequilibrium. I would love a rally to the top side. Maybe we can step up and sell 93.50s or somewhere in that area, but we're still a few hundred pips away from that, so we might be waiting a little bit deeper into March to make that play. The bias, still a little bit bearish. You can see the downtrend is very, very prevalent on the weekly. We're rotating sideways. However, that hammer formation suggests that there may be some bidders in this market. We'll wait and see that we'll wait and see that as the week unfolds. Okay, everybody, so that's a good look at this week's. Those are our Switch On Hot Picks. Be sure to trade very, very carefully. We've got how to trade how to trade volatile markets, a webinar coming across the board on Thursday on our Switch Markets channel. Be sure to tune in and check that one out. That'll be a lot of fun. I'll give you some tips on how to manage the volatility and how to manage your risk in the face of chaotic markets. Okay, everybody, that's it for now. As always, trade the action well, and we'll talk soon. See you.